For more on the global markets, we're joined by David Nelson. He's the chief strategist for Belpointe Asset Management. David, always good to have you.
Thanks for having me.
David, the Dow and the S&P hitting new highs today. Just 2 weeks ago, global markets were plunging into the red on the aftershock of the Brexit vote. What's going on, and can this rally continue?
I hope so. Look, a couple of weeks ago, like you said, many were calling it a black swan event, and the world was going to crumble. Maybe it's a gut check for Europe, and maybe catalyst for change. That could be good news. The United States has become kind of the safe haven play for a lot of international investors. They look at around the world. They look at what's going on in Europe. They look at what some of the geopolitical turmoil that takes place around the world. So we've become an influx for assets that come into this country. We certainly have challenges here, but we're probably still the best house on the block.
Like you say, the cleanest shirt in the dirty laundry hamper, but the volatility is still out there. The uncertainty over Brexit is still out there.
It'll always be out there. You know, I've been doing this for a pretty long time, and there's always been a wall of worry, a reason why we couldn't push higher. There was always a macroeconomic event, a geopolitical event that we were worried about. But the sun comes up in the morning, and we learned from Brexit. Look what's happened in just the last couple of weeks. The United States has broken out to an all-time high. The MSCI World Index has completely recovered from Brexit.
Right.
Britain has actually gone even higher. I have some deep concerns surrounding Europe, but I think we're going to come through this okay.
Well, part of the reason that we're seeing equities rally is because of those persistently low interest rates,
Sure.
right?
Well, of course. You've got a U.S. 10-year under 1.5%. You've got negative interest rates around the world. Why not invest in an asset class where you get some semblance of growth and income? You know, the average dividend yield for the S&P 500 is well above what you can get for a 10-year treasury. So why not? Why not?
So fixed income isn't looking so hot, but investors across the globe seem to be betting on more stimulus. We got stimulus from the Bank of Japan.
Yeah.
The Bank of England is meeting this week. Who knows what the Fed has in store? A rate hike not looking that likely.
They're in Looney Tunes land. I actually think central banks are part of the problem. Negative interest rates will come back to haunt us at some point. I actually think the Fed has been complicit in slowing down the economy because keeping interest rates this low has changed corporate behavior. They tend to issue more debt to buy back stock. That's not great for the economy.
Well, there is talk of a corporate bond bubble brewing with all of this cheap money out there.
I think, look, if you look at asset classes right now, people point to the United States and they say, well, it's overvalued right now. But compared to what? You know, you look at bonds and they're ridiculous.
Well, are they overvalued? Because the S&P 500 currently trading at 17.3 times forward earnings, and you compare that with its 10-year of 14.7, that's Reuters data, but it does seem overvalued.
In a vacuum, you could possibly say that, all right, that it is overvalued. But we live in the world of interest rates. Interest rates at these levels make U.S. equity assets look far more attractive. I think we're coming out of the woods on a lot of issues. Oil is now in the mid-40s. That certainly was a drag on earnings. It was also bad for the financial sector. That's starting to clear. We have challenges, but U.S. equity is a better place to be.
So we've adjusted to oil at 40, 45 as the new normal. That's not really dragging equities anymore.
Well, I think at these levels, remember, down in the 20s and 30s, it wasn't just a concern for the oil patch. It was a concern for financial assets like banks, because it was not that long ago that the CEOs of J.P. Morgan and Bank of America were very concerned about the energy loan books to the energy complex. Oil in this level takes some of that fear away.
Do you not think that there is a disconnect, though, between the record highs that we're seeing in the U.S. and the reality of the fundamentals of the economy? I mean, one of the things that we're seeing is that defensive stocks have been the biggest gainers, things like utilities, telecoms, stocks that are a defensive play.
I understand that was the safe haven trade, and in some sense, you're bringing up a good point. It's maybe one of my big areas of concern. You know, some consumer staple stocks are an accident waiting to happen. Companies like Colgate, Clorox, Kimberly-Clark, there's nothing proprietary about toothpaste and diapers. And they trade at valuations like they have the cure for cancer.
Right.
And they don't even yield that much. They only yield marginally more than the average S&P 500 stock.
But these are companies that tend to do well even in times of economic stagnation. So the fact that they're rising, doesn't that indicate that investors don't really believe in growth?
If you've noticed, they've kind of stalled as of late. They were the weakest performers in the big rally off the bottom after Brexit. the first whiff of economic activity, and you're going to see utilities take a hit and consumer staples take a hit.
We've just rolled into earnings season, and the earnings are currently expected to fall by about 5%. What impact is that going to have?
Look, we've seen the energy drag. That's been a big part of this. The good news is that if energy stays here in the forward quarters and going into next year, the S&P 500 earnings are going to start to rise. It hasn't. We've been in an earnings recession. I'm not going to deny that. I'm not looking for a lot. If we can just meet the earnings, more important to me is the commentary.
Right.
I don't want to hear any complaining about the dollar being a problem for them, because I look at the dollar right now, it's exactly where it was a year ago. It can't be that much of a problem.
All right. So given all of this, do you think this rally is going to continue?
We're going to stumble along the way, and we're going to inch higher, and we'll have some retrenchment. But price is truth. We broke into a new high. If we can sustain that for more than a couple of weeks, I'm pretty encouraged.
All right. We'll leave it on that encouraging note. David Nelson, Chief Strategist for Belpointe Asset Management. Thank you.
If you like what you just saw, follow us on social media and visit our website, cctv-america.com.